My name is Linda. I'm one of the founding partners of the Scalable CFO. Just to give you kind of what this talk is about, is that I think a lot of people have this impression of Dubai as being the land of opportunity, the sky's the limit, but when you dig a little bit deeper, it's actually quite complex and it's not as easy as it seems. So how do we kind of help each other navigate through the system, which is what this conversation series is born out of. There are lots of experts out there who give talks in terms of how you start a business to running an operation. So we really want to create a community of experience sharing through meaningful dialogues, so that we can learn from each other's failures as well as successes. And to help us to do that, we have our guests today. But before we actually introduce them, I want to introduce Janine and Ori, who are the creators of this talk series. So maybe you two can tell us a bit about yourself and how it all started and why you felt the need to kind of start this conversation.
Hi, I'm Janine. Welcome. Thank you for coming. 2 years ago, I think we started talking about creating a series like this. The real reason why we wanted to do this was because we felt like law and finance was not as accessible to the big public, especially not to startups and SMEs. So we just wanted to create a platform where people could talk and exchange experiences like this. So I'm a lawyer. I'm working for Agentum Law. It's a very cool virtual law firm, and we're working with a lot of startups and SMEs, and it's been fun so far.
I think first of all, I just want to thank you guys for coming, and it's really a pleasure to be able to talk to you guys about what we're going to talk about today. And then of course it's a pleasure to be sitting here with Leen to go share a little bit about how we work together. So we wanted to get as many questions as possible answered. But what we realized early on is that we needed to know the questions that people want answered, and to give valuable information back out. We need to actually engage a little bit more with people and understand, share the experiences and hear what kind of concerns are coming up. I'm the founder of the Scalable CFO. You can be more than welcome to just have a look at our website just to get some more information about what we do.
So today we have Leen with us. So Leen, her business is very interesting. So the name of the business is called THIS Toothbrush, and she actually started this when she was still a student in New York. So Leen, can you tell us about what was the inspiration behind it, and how did you kick-started it, and how you turn a project into a business that is today?
Sure. As you mentioned, this started as a project in graduate school in New York. My background's in design, nothing to do with finance or law. I was taking a product design class, and the brief basically for the class was to redesign the first thing you throw out when you leave class. So I left class that day and threw out a tube of toothpaste. So what that ended up being was a project around reviving an ancient method of dental and oral hygiene called the miswak. And it's a natural toothbrush. I don't know if any of you have used it before. It's a very specific tree that it comes from. It's the branch or the root of the tree. It has a lot of amazing scientific benefits. It's been shown to fight plaque and gingivitis and all that kind of stuff. But it's also an Islamic tradition, so it's been around for a really, really long time. It's just one of those forgotten traditions. So the brand that I came up with in this project was called THIS Toothbrush, and the idea was, how do you market something that's been forgotten and is this old to a new market, or reintroduce it to people who already know what it is. So what this toothbrush is it's a line of products that modernizes and makes it easier to use the miswak on a daily basis. So we sell miswak, and we also sell accessories around the miswak. So one of our signature products is called the cutter case, and it cuts, stores, and peels the miswak on the go. And it keeps it fresh and hygienic, so it doesn't attract bacteria. It looks cool and it's slick, and it fits in your pocket or your purse. That's kind of how this whole thing came about. And of course at the time I didn't have an actual product, I just had an idea. And I didn't really think much of it. I didn't think I was going to take it anywhere further than that. I presented it to the class. I remember the class thought I was crazy. They're just like, oh my god, this is so weird, like where did this girl come from? But we all had a good laugh about it and moved on, and I had 2 more years of grad school after that, so I didn't really think much of it. And I put it up on my online design portfolio where I put all of my work. and kind of moved on to the next project. And soon enough, it got started getting a lot of press. Somebody found it, they must have found it online, started writing about it. In a lot of, those gadget websites like Gizmodo and in Habitat, where they're like, you won't believe, this toothbrush. And I thought it was really funny. I wouldn't, again, still did not think anything of it. And people started emailing me asking, like, where can we find this product? It looks like it's in a pharmacy, it looks like it's here, it looks like it's there, but really it was all photoshopped. There was no product. Yeah, and so I started getting all these emails, and I was like, okay, I guess people are interested in this. And a lot of the people who were emailing me had been Miswak users their whole lives, so that was also a big surprise to me. Fast forward a few years, I ended up, just putting all these emails in a folder. 2 years later, when I graduated, kind of revisited the project and started seeing, okay, what can I do with this? There seems to be a huge demand, so it would be a shame not to go ahead and do it. So I started working on it. I had a full-time job at the time. It was like a side project. Ended up working with an industrial designer to actually create this idea that I had of the cutter case. And then once it was time, once we had like a working prototype, put it up on a crowdfunding platform to raise some money for production. Raised about almost $20,000 to $20,000 for production. That was kind of the beginning of it turning into something more like a business, because once I had that, it was like, okay, now I have responsibility. Now I have people waiting for the product, and I have to figure out how to make it. This was really just an idea up until that point. So I quit my job, moved to Dubai because a lot of the interest was coming from this region. I started the company here, so this was 3 years ago. Launched the product to start with in Dubai, and then shortly after launched an online store, started shipping worldwide. So now our customers come from all over. We have retailers from all over as well. And that's kind of how it became, a business.
Thank you for sharing that with us. Yeah. So Ori is your financial advisor. At what stage did you realize that you needed help with your financials, and how did the relationship came about?
So again, I come from a design background, very little knowledge of finance. The startup journey was kind of figuring everything out on my own, as you do. And so part of that was just, okay, figuring out I have this product, how do I sell it? How do I launch an online store? How do I market it? Who am I targeting? And along the way, it was going well. Like, people were buying it, we were making money. But there came a point where it was really crucial for me to understand, how is the business actually doing? And that's when I heard about the Scalable CFO, particularly because there was a potential acquisition deal that came my way. And it kind of was a big, okay, now I really need to know what's going on, because I'm going to have to tell people and convince them why they should invest in this business and why they should actually acquire this business. To me, now looking back, it was too late. I should have actually sought out this kind of support much earlier on, but I'm really glad that I did, because it was a very crucial time in the business. And the main thing that I approached you for was to come up with, one, to do a financial analysis and see, okay, how's the business been doing? What are the elements of all of these, of all the churns that go into making the business work? And 3, what is the value of this business? Like, I could not figure out how I would even start going about that process. So that was kind of the turning point and the time that I came to the Scalable.
So I think, from when we talk about financial model, it's always very easy for financial professionals to try and explain what it is, but it doesn't necessarily translate into a layman's language. So I want to hear from your perspective, really, what, for someone who doesn't know what a financial model is, how would you interpret that?
For me, it was really about breaking apart all the different parts of the business, studying that, seeing what has happened in the past. So taking all of the statements, all of the financial decisions that have been made, all the sales, all the marketing that has gone in, every aspect of the business, kind of laying it all out, breaking it up into these different categories, and then really looking at that in order to build a tool that would allow me to make decisions in the future. For me, that's what a financial model is. It's a tool. And what it allows you to do is it allows you to kind of weigh out your options. Because for me, before this and throughout, and I'm sure a lot of other founders will relate to this, you're kind of just in the grind, you're in the daily, you're really focused on what do I need to do today, what do I need to do this week. It's very hard for you to zoom out and kind of look at how is my business doing, what have I really accomplished in the last year. And this exercise was really about digging into all the decisions that have been made and how they've shaped the business and how it's doing. That's one part of it. And then the other part of it was really analyzing it and saying, okay, I have all this data that's been aggregated, and thankfully I'm a very tech-focused person. Like, I don't really know how to do things analog. So from the beginning, everything was documented. Everything was in some kind of software, whether it was inventory management software or accounting software or an Excel sheet or whatever it was. The data was all there, or like my ecommerce is hosted on Shopify, and that brings in a lot of data. So I had all this data, I had just never really done anything with it. And the financial model was a way to take all of that and kind of understand it, analyze it, and create a tool to work with it for the future.
So do you felt that, you know, it was very beneficial for you to have a financial model for your business?
Yeah, absolutely. Sure. I wish I had had it earlier.
Ori, can you walk us through the process in terms of how you developed the financial model with Leen?
I think with the financial, Leen broke it down very well in that, you know, it was about really chopping your business up into pieces. You know, the initial idea when you go into doing something like this is you have to understand what the outcome that you want is going to be. The approach that we normally take is that you think, okay, what are the key elements that need to come out? And usually that's information that people who look at your model from outside, whether it's internally the CEO or somebody else, what information do they want to see, and what's going to help them assess whether your business is doing well or not. So in order to do that, it's absolutely crucial to make sure that, you know, every single aspect of your business is captured in that. It's a step-by-step process, because as much as we're trying to dissect the business, we're also learning about the business, because every business is different, but at the same time, the fundamentals of a model are the same for every business. As much as they're the same, we have to go through this process. So with Leen, we took an approach of, okay, tackling one area at a time. So the first session was really trying to start off at the top level. So what are the key what's the common language within the business? So what are the core components in revenue? So what are the different products that are being sold? What are the different channels that Leen is selling across? So you had e-commerce, and you also had retailers. And every single element that we define has to be a common language across every single detail in that model. So every single element has to be linked together so that in the end you don't have to go to a sheet and not know what that sheet is about. Everything makes sense. So we defined the revenue channels. We looked at the products and said, okay, what is the product hierarchy? What are the different categories of the product, starting from the top level to the groups, the subgroups, and then the product line. We had a look at other elements, like what are the different activities in the business. So all there's usually core activities or core headlines that we would want to identify, because again, those are at a high level what your output needs to communicate. So we started with that process of mapping out all the common language, as we call it, and then we started to look at core components of the business model. The great thing about Leen is that she already had figured out a lot of elements of a business model. Many of you may know of the business model canvas, that where you go through different components of your business. What are the key activities? What are your resources? Who are you selling to? What's the ultimate value and product that you're creating? How do you generate revenue? And all those elements were essentially, the answers to all those questions was there. So without that, you can't actually get a very meaningful model out. So then we started off with, we went on to look at building out the revenue. We call it the revenue build, where every single component or every single product that you sell is represented in a way that you can input certain assumptions about the number of sales you expect to make or your demand. You can actually input that into that sheet, and that is essentially what drives everything in your model. So you have to actually start with an idea of what you want to target. Everything else then is built off from that. So there's certain direct activities that we can build. We call it the price structure, or a formula and a recipe of how your business runs. And the starting point, though, is the revenue sheet. Then we started to look at how do you get people to actually buy your product? What's the main activity? What's the main drivers? And each of the channels have different activities that will drive customers to buy the product. So understanding what those core elements are is very important because every single element, every single activity has a cost attached to it. So we looked at what e-commerce was quite interesting because we had certain data that Leen had, which she was not aware how that could translate into her sales. So we took that information from the e-commerce digital advertising that she'd done to see what kind of statistics was she getting from that. Because that was the basis of, for an investor, they want to look at your model to see if there's it makes sense and that it's just, your numbers are justifiable. You can actually say to them, well, actually these are the numbers that I managed to, these are the conversion rates that I managed to get from my activities. So those activities, those conversions need to be built into the model as assumptions. And that marketing and traffic build has to be linked to your revenue. So that once you start to play with those figures and you say, okay, what if I increase my budget a little bit by this much? How does that impact my revenue? So that was a core component, understanding that marketing build aspect or what drives sales. In retail, some channels are a little bit trickier. So you won't have stats and numbers that you can look at to figure out how it's done. But there you have to start looking at benchmarks, you need to start to look at what people do in the industry. You need to have a feel for what's the level of investment that you need to put in to get a certain output out. In retail, for instance, there's a lot of hidden expenses and hidden costs, like there'll be certain rebates for putting your products on a shelf, or there's certain marketing activities which you can't really ascertain what they do, but you only get a feel for it over time. So of course it's a big assumption initially, but then as you use your model, you would then get a better idea of making those estimates. And then the next part was to understand, really map out all the other direct costs that are associated, that are directly linked. So the major cost for, obviously, in Leen's case, is the products, or the production. So the production build involves trying to understand what are the core components that each product is made up of, and making sure that you itemize it and you isolate it, so that again you can play with those individual components.
So Ori, if you have to sum it up, what would you say the right ingredients? What would you say the right ingredients are for someone to have a successful financial model and a realistic valuation?
Again, I think it goes back to trying to really make sure that you identify all the elements of your business. So we spoke about marketing, revenue, and then there's the people expenses, making sure that you actually understand what resources you need to build your business. So you cannot leave any activity out. Everything has to be factored in. From a perspective of someone who's building a model, it's important that everything is completely linked, and that you have a clear idea of where the assumptions and where the inputs are in the model. If you want to use that model as a tester, as a way to predict the outcome, you know where to go to and to make adjustments. The other key important element of a model is to really understand what's the main output, or what are the main KPIs and numbers that you need to see from both an operational level and from a financial reporting standpoint. For instance, you want to understand certain metrics of how well you're optimizing your costs for getting customers. That number needs to be front and center in a summary sheet, so that you can easily go to it and see what the impact of your results are going to be. The final thing is to just really understand that your financial model is meant to be something that you use as an operation, as a tool to make decisions. You need to get comfortable with it and play around with it. Don't be afraid to play and dissect it and put it back together again. Yeah.
So how would that translate when it comes to a valuation standpoint then?
From a valuation standpoint, I think the way that there's two ways that you can build a financial model. It's either you build it for internal purposes or for external purposes. So it's an operational model, or one that's meant for people to see how your business is doing, and they look at it from an external perspective. Usually people look at these separately, but it's very important to actually look at it together. So when you build a model, know that the operational aspects need to be linked with your valuation, a model, so that you can start to see what your every action and every activity, how that will actually impact the company's value. So you need to think about your business as an asset that you're building. So the business as a whole is an asset and it has a value. Every activity has a repercussion. Really understanding that those two are closely linked is the most important thing.
Any chance you can talk about, different stages of fundraising while we're on the topic of valuation?
Yeah, so valuation is very interesting, especially here, because I think generally the investor community is not as, they're still learning the ropes of how to go about valuing businesses. So what you tend to find is in the early stages of a business, at the seed stage or even the idea stage, they tend to have a certain idea in mind of a cap that they're not willing to pay. They're not willing to value a business more than that. So you might think my business is worth, 15 million or 10 million, but purely because you're at a certain stage, at a seed stage, they will not value you past a certain point. You just have to demonstrate key things that you have the team you can execute, that you have the understanding of the market and you have goals, and you understand how those will translate into value. So that's at the seed stage. Then so seed stage is really all about proving that you know how to build your MVP, you know how to test, you know what elements of your model you need to test. And potentially some investors will require you to actually be able to validate certain elements of your model at that stage already. The second stage is the Series A, which is a growth stage funding. That growth stage funding can happen in many stages. It could be Series A, B, C, D. It can go on. It just depends on how many growth sprints your business needs. At that point, you should have already validated most, if not all, of the assumptions in your model to some degree. You should have already worked out exactly what's going to work and what's not going to work. And you need to be in a position where you are now looking at growing, or either it could be developing your platform further to have additional features, but the ultimate goal is to actually now take it to the next level. As each fundraising stage, if there's a need for it to come up, then you obviously have different goals and assumptions that you need to prove at that point, but they're very much growth focused. And then of course, for investors, as you're going through this phase, you need to demonstrate this to them. So showing that you understand that you have different stages where you need to inject money or you need to actually boost your business a bit. Give them an idea that you are also a bit conscious of the fact that they're investing in your business. So they want to see an exit phase at some point. So the exit for investors can either be at those stages or it could be at the final acquisition stage. Those are essentially the main stages. You have your just seed stage, you have your growth stages, which can be a number of them, and then you also have your exit stage. Yeah.
Right, the next question is for you both. Why do you think financial awareness is so important to a successful business? And do you think by having a good financial model that necessarily translates to a better valuation?
Yes, and was the first question the yes and the no question? No.
Yeah, it can be.
Why?
Yeah, why do you
So
think
yes
it's
to the second question, definitely. Yeah, I mean, why is it important? It's the pulse of your business. So I think I made this mistake early on and maybe it was out of fear of not knowing where to start or how to look at it, but I definitely just was in autopilot mode of like, okay, whatever comes in will come in, whatever happens, happens. I wasn't really planning that far ahead, and I think a lot of businesses when they first start out, they want to test the waters, they want to try everything. Like for me, anything that came my way, I said yes to, and that's why I think when we started, we were looking at a lot of different revenue channels, because if a retailer wanted to carry the product, I said yes. If they wanted consignment, I said yes. If they wanted wholesale, I said yes. If somebody wanted corporate gifting, I said yes, and that opened up a whole new department for me. And I think that's really, really important to do at the beginning. But once you're a little bit more mature in the business, it's important to use a tool like this or a process like this to understand how to make decisions in the future. So, for example, I realized that retailers that were on consignment, meaning they don't pay for the product, they give you a percentage of whatever gets sold. That ended up being harmful to the business. Even though it was money coming in, it ended up being harmful because the resources that it needed to follow up every single month, please send us a sales report, please pay us for the amount that was given, trust that they'll give the correct sales report. All of those things that went into that led me to realize it just doesn't work for me. So a tool like this allows you to plug in very easily. I mean, at the end of the day, it's like a dynamic Excel sheet. Okay, what happens if I stop doing consignment altogether based on historical data? What happens to the business? Where do I need to make up for it? What happens if I introduce a new product line? What happens if that product line is at a luxury tier or at a low tier? What happens if I change the prices of my existing products? What happens if I increase my marketing budget? So it's kind of like a what if tool. And once you start doing that, it allows you to make decisions that are much more informed than, okay, maybe this month we'll stop doing retail, or maybe this month we'll enter into a trade show, or whatever it is. So it's just a more informed way of making decisions, and I think that's super important. The challenge is definitely, for me, for example, like getting into the habit of doing that, because my brain just doesn't really work that way. Although when I did see the tool, I was like, wow, this is magic. Like, I can't believe this is how other people who know what they're doing, like, manage a business, you know? So getting into the habit of using that, and one, learning how to use it. And I know we spent like hours of me being like, wait, can you explain this again? Like, I don't know what this sheet means. I don't know what this word is. I don't know what, but once you get a feel for it, it's really pretty intuitive and allows you to holistically look at how your business is doing. And also from like a psychological perspective, obviously being the founder of a startup can be very, very psychologically draining, especially if you never really know how you're doing. You just know how you feel that day, that month, whatever it is, and you're like, okay, we're selling enough, but how is it doing on a holistic level? So what this does, I think, is it gives you a lot of confidence in what you're doing. And that was one of my biggest takeaways. Like, of course, it was really valuable to me in terms of having a number. Like, here's how much your company is worth. Here's how much work you've put in and how much you've made. This is how your business is doing and what you can do in the future. On top of all of that, it was more the confidence of, hey, this is a great business. This has a lot of potential. Like, you're doing XYZ pretty well, so focus on that. Or your pricing is actually pretty on point. Things like that I, you know, like my pricing, it was calculated, but a lot of it was a hunch, you know, a lot of it was like, I think people will pay this much for this product, and actually getting the mathematical data behind it and saying, no, actually mathematically, your pricing makes sense. That is a huge boost of confidence, and allows you to really, in my case, like walk into that meeting very confident in what I had and what the value of my business is. Where a lot of times you can doubt yourself, you can say, oh, they'd never accept this number, it would never be valued at this. This was really a huge benefit for her.
So Ori, through this process with Leen, you know, that she's going through a great transformation, educational point of view, because of her understanding, the financial model got better and better. So do you see that being translated in terms of valuation-wise as well? Or do you think it's necessary to have that level of understanding to get a good valuation?
I think with you know, financial awareness, there's two elements of it. There's two degrees of it. The first is understanding, okay, that if I do something, it's going to impact my cash flow, or being a bit conscious of the fact that, am I actually going to be able to pay my creditors this month? You know, so there's a certain level of financial awareness which is pretty much a lot of people are more closely familiar with, because it's so easy to visualize and to understand the impact of it. But then the second level of financial awareness is where you start to really see the value that your business creates, and this is where the valuation aspect comes in. And I think that there's a certain, not to kind of repeat the word, but a certain value for investors in seeing a business owner who can actually tell a compelling story about how their business is functioning or how their business operates, and actually be confident in the number that they put forward. So it's not so much that it translates in numerical form, but it's more about the mindset that you do realize that you're building an asset, and whoever invests in your business knows that you are already building an asset, and therefore they're more comfortable putting money in that business.
So, quite a lot of companies, they start out, they limited funds, if not no money.
Yeah.
So if they want to build like a credible financial model, how would you advise them to go about it, and what are the kind of common mistakes to avoid?
Yeah, and I think it's money and also time. People don't have the patience and the time to to do that. But honestly, if you're absolutely strapped for money, my biggest advice would be to probably just Google and go online, because there are a number of models out there. In fact, it's also the best way to also learn. There's a lot of people who spend time working on different types of models, and it doesn't have to necessarily be a model that is specific for your industry. It could be, because they all have the same fundamentals. Break them apart, pull them together, but there is effort that needs to go into it, because ultimately people can see when a model is just a quick and dirty model. And it doesn't do much in terms of, it just delays the process, and it doesn't do much in terms of supporting you when you're trying to really put your business forward. There is time that you have to put in, but that said, there are resources out there, and you can just have to go online and look up the resources. But the prerequisite also, the other thing that you need to do, I think, to make that process easier if you have to do it yourself, is to do a little bit of learning or of the basics, the fundamentals. So understanding what an income statement, a balance sheet, and a cash flow statement is goes a long way, because these are very different statements, but they can be very confused. People can tend to confuse them, and you don't have to understand the absolute details and theory behind accountancy, but at least know what you're trying to produce. And I think the other thing that's challenging is finding comparables and finding companies that are data to support industry data, industry performance. So in this region especially, there's not a lot of information out there, but there are platforms that are coming out that are trying to consolidate information, like for comparables. I think also people get stuck with trying to find a company that is exactly like what they do, like another company that sells Meswak. It doesn't have to be like a company that does exactly what you do. It could be a company that is in the same general industry, or you could find that within your business there's multiple industries that are embedded in it, so you use those as benchmarks. And again, information is available online, so don't be afraid to just to put a question out there. You'll get the information back.
Just to add to that, to the online resources, I mean, ideally you would work with somebody who's knowledgeable, and that was really, really valuable for me.
Yeah.
But maybe if you're just starting out and you're not ready to invest that kind of money yet, and you're kind of just playing around with it, there's a tool called LivePlan that I really like. That is a great, it just kind of teaches you the basics and allows you to play around with it, and it's extremely user friendly. So that would be my recommendation.
So Leen, having gone through this whole process now, what were your expectations going into this, and were you surprised by what you learned through this collaboration?
I mean, my expectation was more that I didn't really know where to start. It was like, okay, I need to go into this meeting with some kind of valuation for this company that I've been doing for 3 years. And I think my expectation was that it was going to be very, segregated. So it was going to be like, okay, we meet and then you come back, a month later and say, okay, here's the answer. Like, you're done. You can go off now. I'm really happy it wasn't that, because I wouldn't have understood any of it. So I think what surprised me was how hands-on it was and how collaborative it was. And now that I've done it, I understand why, because on your end, you really have to understand what the business is. And there's no one who understands the business better than the person who's been doing it, even if they don't realize that they understand their own business. So what was really surprising to me was how collaborative it was, and how hands-on, and there were so many working sessions that we did to kind of dig deeper into what's been going on, build this so that it's accurate, check the accuracy of it, make sure that we're on the same page. And the other majorly surprising thing was that it was going to be an interactive outcome. That
It actually does get fun.
Yeah, that part gets fun.
When you start to play around with the numbers.
Exactly. So I didn't think I would walk away with a tool that I would be able to use indefinitely. And that was really helpful. And it was also kind of like taking a small course because I got to learn a lot. You guys really took your time, very hands-on approach, which I'm sure not everybody has the same experience with.
And I think that goes back to financial awareness, because that level of appreciation comes from if you actually have an interest in seeing what the outcome is going to be, then you will invest the time.
Yeah.
So even if you do have somebody doing it for you, I think you still need to go through the process, because ultimately everything stops with the business owner. When you're sitting negotiating about on that acquisition, it's you facing the
exactly. And I mean, we spent so much time with you educating me on how we got there. You know, it's like, here are the different methods we used. Here's the average of those methods. Here's what each method means. So when you walk into the meeting and you're using all this terminology, you really, you know what you're talking about.
And actually, that's a good point on the methods, because this is not a science where you say, or you're just going to bring out, say, this is what I think the number is X. You do have to. We also check ourselves. You have to do always look at multiple methods, especially with evaluation. It adds more credibility because every single method has its own bias. So the more you look at, the more you actually you strengthen your case when you're dealing with these with investors.
Yeah, and you're being able to justify it is everything. It doesn't really matter what the number is. There's no real value of your business. It's what you say it is. So having that justification behind it and knowing how to talk about those justifications, I mean, that's super valuable. I mean, in my case, unfortunately, the deal didn't end up going through, but when I walked into this meeting, there was no hesitancy about me knowing what I was talking about. I could feel that there was respect. I could feel that they understood that I had done a lot of research, done a lot of work, and had come in really knowing what I was presenting and coming in with a very realistic expectation. To me, the meeting was successful. The approach was successful. Even if the deal didn't go through, I mean, this happens all the time.
So clearly you two have a very trusted relationship. Did you have like a checklist that you went by on deciding who to work with and why?
Honestly, no. My friend had worked with you guys and recommended, and he didn't even recommend. He was like, don't even think twice. Like, you have to work with this person. I was like, okay, great. I don't have any other options, and I don't really know anything about it, so. I went in very blindly, honestly, and it worked out. So.
Thank you. I just want to open it up now to some Q&A if anyone's got some question to ask.
Your model is definitely a one-sided model. So, do you consider involving like the third party in like a simulation or so they can play with the numbers, or is it only the one-sided model?
I mean, when we prepare the model, it's prepared from the business owner's perspective. This is the thing with financial models, is that, and especially valuations, is that it's always with an objective in mind.
Yeah.
So if you're going to go and build a model because it's for a merger and acquisition, it'll be different from a model growing your business, internally. Because when you grow your business, you'll probably be a little bit more prudent. When you're trying to sell, you're going to be a little bit more optimistic. That's why when you model, you should always look at worst case and moderate case,
Yeah.
So we try to build it so it's dynamic, it's flexible. So if someone wants to challenge it, they can.
So you show one.
No, it's dynamic. It's a dynamic model. So if someone wants to challenge the numbers, they can still play with it. Yeah, they can still play with it. Yeah, they can play with it. They can even add, changes to some of the assumptions.
A scenario that is not even built up.
Yeah. So if it's a fully open model, so you decide how much you want to disclose and you want to show it to whoever you want to share the model with at the end of the day. Because some people are happy with you just providing them with financial statements and your pitch was excellent, so they're willing to just give you money off the bat, and others will want to dig in further and play with it a little bit more. But in terms of getting a third party involved, we wouldn't necessarily do that, and it would be up to, again, you, if you want to get somebody else to look at it, or an investor might as part of the due diligence want to have another person, or even not even look at that model, but even do a whole separate exercise altogether.
Yeah.
Obviously, the more options you have, the more models you have, probably the better, because
No, because I did it once, and I provided the simulator,
Yeah.
and I told the investor, look at the numbers,
yeah,
try to pull,
Yeah.
increase the prices if you want, decrease the prices if you want. I let him some area where he can eventually
Yeah.
pull the things and
yeah,
eventually come up with a P&L that
yeah.
he will be convinced. And I thought that by doing that, I make him
Be
gain
transparent.
confidence.
Ah,
But
yeah.
at the same time,
Yeah.
he starts like getting
Doubting.
cold feet, because he was like, okay, I was expecting like to see a more of a standard vision.
That's,
So
okay, I think maybe
sometimes
yeah.
it's beneficial, but
Yeah.
sometimes it
And
can
it's
fire
also
back.
important to build it that way if
Yeah.
that's the intention. Like
Yeah.
if the intention is to share it with someone and have them play around with it, I imagine you'd build it
Yeah.
very differently than
Yeah.
if it was like,
Yeah.
let's see internally so that I can then.
Yeah, and also
That's
remember
how-
remember when
Yeah.
We want to see it
Inter-
on a multiple scenario without like going around.
Exactly,
Yeah.
so it would be built very differently
And
than
then
if you
you
want to
put it
show
out.
someone, yeah.
Also,
Like
I
maybe
think,
you would hide like half of it.
Yeah, you exactly. That's exactly what you do. So with investors, see, the thing is, they might want to see it, but initially you have to kind of set the pace a little bit initially. So you wouldn't necessarily give everything up front. You give them information that is familiar and that is pretty standardized. So financial modeling itself is not a standard. There's no standards governing
Yeah.
how you will build your model. People do it so differently. So obviously people are going to question it. If they have an idea in their mind, they have a certain preference, they'll be like, well, what can we do it like this? So you always have a set of the financial statements which are understandable.
It's more like
So,
a
like,
painting. It's coming
yeah.
from your perspective, what kind
Yeah.
of picture you want to
But
paint.
in her
Exactly, yeah. So those financial statements are the ones that give more comfort, because they'll start off saying, okay, I'm familiar with this, it's a balance sheet. I know what a balance sheet is. Here are the assets, here are the
You're
liabilities.
speaking the same language.
In Leen's case, you had because it's a running model, it's a running business, so
Yeah.
it's not a seed, not
So
nor
you
a
have
growth
data.
one phase. So
Yeah.
it's a bit easier to eventually have a valid number.
For sure, yeah.
It's not there. There's no magic formula. How do you value the company?
So this is why it's important that, we spoke about the business model. So if you've done your homework in terms of understanding what are the elements that you believe need to be within the business, those have to be represented, and it has to be very clear, and you have to demonstrate in the model that you have thought about all those areas. And then everything, there'll be a lot of assumptions, of course, in the beginning. Over time, those assumptions will hopefully turn into, more fact. But you have to rely on the benchmarks, industry, understand what the margins need to look like in the industry that you're working in, and make sure that whatever you are doing, you're clear that you've represented all the activities. At the same time, your output is not whacked out. It's still reasonable. So that's the most, I think it's a very tricky one for sure when you're starting out, but it all has to do with the level of homework that you do, And that homework is really, in the early stage, really purely based on research and just demonstrating. If they have if there is a certain doubt about the numbers and their validity, when you sort of give too much flexibility, say, them and put whatever price you want to put, then it becomes a little bit, okay, is it because he doesn't know the numbers? But if you can show that I've done my research, I've looked at retail, I've looked at the product that I'm making, this is how much products usually go for on the market.
Yeah.
It might not be exactly the same product, but I've done a bit of homework and I can justify it. That's the main thing, really.
Yeah, I spoke to a friend of mine who actually does VC work. So he gave me a lot of food for thought as well. We did a bottom up and a top down
Yeah.
approach for the plan. Ultimately, what I netted out on, and this is what I need to sort of advise your thoughts on, is the point that you guys brought up earlier is it's really hard to value a startup that hasn't yet traded at all. So what do you rate it on? Is it the technology? Is it the individual? Is it the cumulative skills of the
Yeah.
team? Or is it like what Leah was saying is like, we've done the numbers, you can toggle it a little bit. But the takeout that from the point you made, from my learning is, you have to have a vision. And you also have to have disagreeableness. That if somebody gets into the model too much and says, "Oh, I don't challenge your assumptions," you've got to be able to come back and say, "I disagree with you here," and I'm pretty sure we're going that way.
Homework. Yeah.
Exactly. So it comes back to the point that you were saying about homework. So my question is, this long drawn statement is there a common methodology that is often used for startups at the startup phase? Like, what do you look at?
Depending on the strategy of the fund, some of them already have decided that they're not gonna. They want 6% and they're gonna invest maybe 100,000. So you do the math. If they want 6%, they're gonna invest 100,000. Then they've already valued you at, I don't know, 2,000.
No matter what, that's your number.
Yeah, that's what they're gonna do. And then you get those who are willing to increase a little bit depending on the strength, like this key element that they would look at it in the early stage. They look at the team is probably the most important, thing is the team. And then you look at do you actually understand the business that you're trying to operate in? Do you understand what you're trying to do? Are you just sort of, you have this crazy idea, but you haven't really thought through, the model and the execution of it? And then what's your plan? I can't even emphasize enough how much it has to represent exactly what you need in the foreseeable future. So if sometimes as startups tend to, and I think it was the same when we spoke about this actually initially, where you think, oh, I've been operating at this level, I've bootstrapped so far, I only need like, I don't know, 2 people next year, and I can generate $1 million. But realistically, you have to be able to show that you know what resources you need, what kind of people you need, and factor all that in. It might look like a big number, but then that's why your sales targets need to be maybe a little bit higher to cover that. So it's demonstrating that being able to understand those elements is what's important. And then of course, you mentioned vision is actually one of the most important things, the ambition and the vision, because when people are investing in a startup, they want to get a return out. So if you come and you say, okay, this is the value of my startup, and I want to raise now, and that's it. You stop there. They're not going to invest because they're like, well, he hasn't thought about like, how am I going to get out? How am I going to make money from this? Is there going to be another fundraise in the next 2 years or the next 4 years? And how much how much do they think is going to be worth in 5 years? What ROIs are they trying to? Do they think that I can get from this investment? If you don't demonstrate those kind of, it's really more about it's demonstrating that you understand the dynamic of a business. That ultimately a business is there to make money. It's there to make profits. You're there to increase shareholder value.
And I think we get really caught up with valuations because we're always hearing, oh, this company, sold for X amount and they didn't even have a product yet. And that kind of blows your mind. You're like, how did they calculate
sensationalism.
Yeah, exactly.
And that's probably 1%, maybe less.
Right, exactly. But those are the ones that you hear about.
Yeah,
At the end of the day, these are all assumptions that you make. There are so many other factors. Like, this is such an important part of it. But there are so many other factors. Like, you might have known all the right people at that time. You might be, at the forefront of this field in some other way. It might be about you as a person. There's so many factors, and we kind of forget those factors, and we only focus on the numbers.
Yeah.
We say, like, how did they get that number?
Like your Facebooks, and those are like some of these companies don't even make a profit. There's a term called the SaaS profitability trap. SaaS models usually you need critical mass to actually start making a profit or to even make money sometimes. So people think it's okay if I just make losses indefinitely. I'll just get like lots of users and then I'll advertise. And you have to be a bit realistic when you do your model. So you have to demonstrate that you really understand the critical elements. But the number at the end of the day is just a number in the early stages. They're not gonna. You can come and say I think it's 6 million. They don't even expect that your financials are gonna be accurate in the sense that you hit those targets in the first. So they know that it's gonna be off. So where it starts to get important, where the numbers, the modeling gets a little bit more, you need to really now show that you can hit the targets and you show traction is once you get to those growth stage fundraising. You have to suss out what the investor is looking to take as a stake, first of all. You have to suss out what's happening in the industry. What other companies, what's the M&A activity in the industry that you're operating in? Usually there's investment or VCs that publish reports for specific industries, those companies that are on it. Every single quarter you'll get a report of all the deals that happened in that sector. And different stages, C and Series A. And you can, I think Magnet's now started doing that. They issue like a report that shows it's in this region, which there's not many of those. So you want to look at that and understand what's going on. And then start to build a database of comparables and companies that you can say, well, at this seed stage, the average raise or the average valuation for my kind of company is X amount. And you use that as a way
You
to
work
kind of
backwards.
It's almost like you have to kind of go into it educating the investor,
yeah, exactly.
be able to tell that story so that you can go through.
You're making a case at the end of the day.
Yeah.
Like your success is based on how good of a case you can make. It's not based on any of the things we're talking about. These are supporting acts to your case, and it's just so you don't come in and say, "No, I'm sure." And you're like, "What do you mean you're sure?"
Yeah, maybe you have to have that level of self-awareness to be able to say that I know what I know and I don't know what I don't know. I can say that to
And I think people appreciate that.
So regarding phases and growth phase, we all, as a startups, we are afraid of this diluting our asset, our share in the business upfront.
That's our
So,
next session.
Yeah. Yeah. But
You got a whole fire.
I can give you a thought with that, by the way.
yeah, so
Like 100% of nothing is nothing. Remember that.
yeah, because I was in that trap,
Yeah.
and I don't want to do it, and I
Yeah.
went to liquidate another asset. So
Yeah.
I had my first business, and it was successful. I sold it, and now I'm struggling. Like I struggled raising eventually, so I liquidate and invested my own because I so believe in it. But I reached a place where it created kind of furthermore a number in my head because I went through this, and again I built a lot of boxes that I need to tick. That many will say you are ticking the wrong boxes, right, rather than the right boxes. So I'm in a place where I don't understand anymore how valuation can take. Is it a combination of eligibility of the person who's the founder or the founders? Is it the money spent till now? Is it because in my case, I went an extra mile, I have a patent pending, I have assets, okay, but I didn't invest neither in employees, which is a big mistake, and another place where you also spread very thin, and that you are recognized in a stress mode, which makes you less agile when she's relaxed. So she went into a meeting, she had a big number.
Yeah, it's a very difficult question because at the end of the day, like it's ultimately it's a human being making a decision, right? So a lot of the times, if someone is not interested in your idea, you think there's something wrong with what I'm doing, but actually it could just be their preference. But what there are certain elements and things that people look at, and it's your job to kind of ask the questions as well. You're also interviewing the investor to understand what is important to them.
Yeah.
Because sometimes some people want to know that if I'm talking to you and I say, you should really think about going into that market, and you say, yeah, actually, you might be right. I'll do some research into that and look at the market landscape. But if you say, no, I'll look at that market and it's not for us, and they'll think, okay, well, he's not open to ideas, So there could be, there's a founder mindset, there's a team. Do they have the right people around them to execute the idea? There's so many things that they look at which are not necessarily financial. But the finances are also, those can also be, that could be the breaking point. If you don't show that your numbers make sense and you've thought about them, it could be a breaking point. So it's a very, you have to really be a bit of a psychologist, I think.
Yeah.
And really understand what the objective is. You have some investors who are more traditional.
Yeah.
And they want to see the profit.
All investors are now traditional after
In
all the hits they get
of them,
because of this big risky things
even the
at the first.
blockchain, the
And
ICOs.
then, so the wow effect is not anymore selling. I have a wow effect.
Yeah. And they all want to
Janine
see
came and
traction.
saw my devices that are giving a very big wow effect, and it's functioning and it's masterpiece. but there's no more investor to buy these pieces.
I think
Millions of
regionally
dollars.
too. I think regionally that wow thing
Doesn't
is
work
not.
anymore.
I don't think it ever really
was in
worked
this
here.
region.
Or
They want
maybe
to
it
see
might be that
you
it's
make a
behind
bulk,
actually.
you want to give a.
They
and
want
you
to-
are pre-
exactly.
You are able to reproduce this
Yeah.
bulk on a million
It's like
times.
missing the
then you are worth $1 million.
imagination.
No, there's that. That's the one element. The other side of things that they look at is have you actually got a market that you've identified? Are people buying? They want to see traction. And
But when you have this all hardship to reach MVP,
Yeah.
then that's happened yesterday
Yeah.
when a guy came and the same guy who challenged me when we had everything on paper. Now
Yeah.
we have the MVP. He say, Winnipeg depending. Okay, great.
Yeah.
Now I want to see you operation.
yeah,
You
yeah.
know what's operation? You know.
Yeah.
I ask him, do you know what's in operation for this kind of thing
Yeah.
going in market? And he
But-
say, yeah, this is what I want. And
Yeah.
then again, when I'm in
Yeah,
a,
yeah, very, very.
So it's a little bit linked to what you were saying. So how do you balance between the bottom up and the top down approach?
Yeah.
Because I've struggled. So I come from operational and finance. So
Yeah.
all the data analysis, like it's amazing for me, but then how much do you analyze?
Yeah.
And how do you do the top down approach without freaking out when you see all the changes that have to happen at the bottom?
The top-down
It's hard.
approach is very scary because you're dealing with big numbers and then you say how much market share do I want, and usually it doesn't. You think, okay, if I say I want 0.5%, is it really interesting for an investor? But you have to use it as it's more of a sense check. So the bottom, I prefer the bottom. Well, not that I prefer, but they're both important. The bottom-up approach is what is your real operations, right? So you need to understand the bottom-up approach, get that right first, then you do your top-down approach, and you start to see, okay, if with my bottom-up approach that I've done, how does it translate in terms of the top-down approach? And then you can start to see in relation to the size, are you being ambitious enough or not, what you need to push. But ultimately, if you have a certain recipe or certain formula that you've worked out at a certain level, you have to then find a way to kind of burst it up a little bit, but without necessarily changing the elements to it. Maybe you'll have some economies of scale later on.
Okay.
But it's not a question of, with the bottom up, the top down is the reason I say it's a sense check is because that's the one that will really show you. Let's say, for instance, you want to do 20 million revenues in 2 years, but then you look at the market size and you only have like 200 people that could potentially buy your, so then it's really meant to be more of a benchmark.
Is it true that there is a magic? I've heard that 3% of the market share is.
There's no magic number.
Okay.
There's no such thing.
I'm not. So I'm like.
There is no such, and also there's over 1%, 0.5% could be actually a very big number, and also it really depends on the industry, on the market. You have to be confident in your understanding of your market and your industry because it will differ from industry to industry. Something like what consumer goods, like in Leen's case, like it's a market that is. If you start to look at the niche market, then maybe you could say the players are few. But when you start to look at consumer goods, then it's a drop in the ocean because there's so many players. There's so many players. So you just have to stick to focus on the research and the facts.
Thank you very much, Leen, for sharing your story with us, and Ori, and thank you for everyone who's coming and finding out those interesting questions.